Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin under the context of FOMC and CPI releases. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we've seen a lot of volatility around some of these different macro events, whether it be inflation releases, headline inflation, core inflation, or the FOMC. And obviously we know that at 2 p.m. Eastern, we'll get the interest rate decision. We'll get more insight into what they're doing in terms of, quantitative tightening, tapering. We know that they said they're going to be tapering at the June meeting, so we should expect to see that. But they're still going to continue QT theoretically. They're just going to slow down the pace of QT, quantitative tightening. And so there's this one idea of, and when Powell speaks, of course, we'll see a lot of volatility. So on one hand, we get a lot of volatility around CPI releases, right? If inflation comes in hot, then oftentimes, not always, but oftentimes the market will sell off because it's theoretically delaying the reaction function by the Federal Reserve even longer to cut interest rates. And if it comes in cold, then oftentimes the market will do pretty well because it means that the Fed could theoretically cut sooner. Now, theoretically, the reaction function of the market could change at some point if bad news actually is bad news and not good news. But so far, that's more or less what we've seen over long periods of time. Now, what's interesting about tomorrow, or Wednesday, June 12th, is that we're actually getting FOMC and CPI on the same day. And so I thought, why not leave our bias at the door, whether you're bullish or bearish, and let's just say, what happened previously when we had FOMC and CPI releases? And so that's what I want to do in this video. Bias at the door, check it at the door. Let's just see what happened. So the red lines are FOMC. The green lines are CPI releases. And so it might be interesting to just kind of see what's been going on, especially since Bitcoin has been up in this range up here. Okay? So we'll look at FOMC first. So we'll note that the last FOMC was May 1st, and it ended up marking a local low for Bitcoin. Note, though, that Bitcoin did sell off the day of FOMC, and it actually sold off sort of the day before it, and then that day as well, right? The day before, it sold off 5% or so, and then the day of FOMC, it sold off 4%, but then that ended up marking a local bottom, okay? And then if you go back to the prior FOMC, you can see that the prior day before FOMC, Bitcoin sold off about 8%, and then the day of FOMC, it actually closed up almost 10%, but it did put in a new low on the actual day, or a new local low on the day of FOMC. And so the low from yesterday, from Tuesday, June 11th, because technically I'm making this video UTC time and it's already Wednesday, but the low was 66,000 or so, right around 66,000. Right now we're at 67,400. So in the same way as literally the last two FOMCs, we sold off the day before FOMC. And then on the day of FOMC, one of the prior times, it closed red. The other time, it went lower, but then closed green at the end of the day. The prior time before that was, in a completely different range. And so, we could go back further and further, but again, you have to remember that when you go from sort of one area to another, the market, the reactions of the market can change, okay? So, if you look at it over here, what you'll notice is that after FOMC, we did sell off, but it wasn't as big of a drop. And even over here, when we had FOMC, you can see that we kind of sold off going into it, and then it popped up right after. What I think is sort of interesting, though, is that what we've seen up in this range, we've seen much stronger reactions, both to the downside and the upside, going into and following FOMC. But in this range over here, the reactions were more muted, right? They weren't as strong. Still similar reactions if you look. I mean, this red line right here, FOMC, more or less marked that local bottom. Here, got pretty close, but we did wick lower the next day. So that's one end of sort of the spectrum on FOMC. But we also have CPI coming in, right? And so then what I want to do is take a look at, well, what did Bitcoin do, on prior CPI releases? And again, remember, a lot of times on a CPI release, if the data comes in really hot, suggesting that the Fed has to stay higher for even longer, then the market will often sell off. Again, there's no such thing as a sure thing, right? Sometimes you can get something where bad data comes in and the market still goes down rather than going up, because whether it means bad news is good news or bad news is bad news. I know that might be kind of confusing, but I promise it theoretically makes sense. So then let's just go look at what happened previously on CPI releases. And so, if you look at May 15th, Bitcoin went up about 7.5%, 7.6%. Now, why don't we go take a look at what inflation did on that day of May 15th? Now, I don't think I actually have, maybe we can find the expectations. Let's see if it's over here. So if you look right here, the last date, May 15th, consensus was 3.4. It came in at 3.4. So when it came in at consensus, Bitcoin rallied about 7.6%. Now, does that hold a lot of weight? I don't know. Let's go look at the prior time. Again, I'm looking at this for the first time. Okay, I didn't look at this ahead of time and think like, oh, this was. I'm just like, let's just see what happened. April 11th, right? So what happened April 11th? What was consensus then? So April 11th consensus was 3.4, right? Or April, I guess it was April 10th, not April 11th. It was 3.4, and we came in at 3.5. So it came in a little hot. And so if we go look at what happened on that day, right here, April 10th, I think I put this on the wrong line. So here's April 10th. You can see it only went up about 2%. Okay? So when it came in at consensus, Bitcoin moved up a lot. When it came in slightly above consensus, it only moved up a little bit, and then it sold off going into the end of the week and the weekend, right? You see that? And you could argue that the reason it went up here was maybe just because of, we were meeting sort of expectations, and so people were not as worried. Over here, perhaps people were worried because inflation was still coming in hotter than expected. At the end of the day, you can come up with a narrative to explain anything, right? The market's going to do what the market's going to do. We've also spoken at length about, ignore all that stuff and just simply look at what happened in 2019, right before the Fed cut rates, and we saw a very similar pattern, right? So again, we can always find a narrative to explain anything in hindsight. So let's look again. Let's go further back. I don't know what consensus was for March 11th. I'm not sure if it shows it right here. Yeah, I'm not seeing it right here. But I mean, you can at least see that in, when we got the data in March for February, it was only at 3.2%. Okay, and in that case, you can see that Bitcoin actually went down slightly. Then the next day it went up about 2%, and then ultimately it came back down. So what's interesting is that both FOMCs that have occurred while Bitcoin has been in this range, approximately that 60 to 70K range, plus or minus a few K on either side, it marked local bottoms for Bitcoin, right? You see that? Pretty clear. Clear as mud, right? CPI releases, the green lines, in two of them, it was around the local top. Not exactly, but pretty close, right? Pretty close. And then the third one right here, the most recent one, it was kind of in the middle of the trend, right? It wasn't really a top, it wasn't really a bottom. It was just sort of in the middle of the trend. We had already moved off these lows, but we were not yet at these highs. And so that's what makes Wednesday, June 12th really interesting, is because you kind of have these competing views of like, well, what's going to be more, what's going to prevail more? Is it going to be CPI? Is it going to be the FOMC? And again, I think a lot of it just simply depends on what comes out of all this stuff. On one hand, what happens if you have inflation come in hot? If you look at expectations, consensus is 3.4. Consensus has been 3.4% every month for these last 3 months, right? I mean, it just seems like that's where consensus is that there's really not any progress being made. But on the other hand, right, and we know what happened when we hit it, Bitcoin went up, but when we came in above it, Bitcoin went down over the following several days. At FOMC, when it was pretty clear that the Fed was just going to stay higher for longer, it ended up marking local lows. Now, the only thing that I think the market is certainly expecting to happen is that I believe the market is expecting rates to stay the same. So if you go look at sort of probabilities rate expectations, the market is essentially saying, you know what, there's only about a 0.6% chance the Fed cuts. And I mean, at this point, there's not that many instances in history, if any, I believe, where the market was wrong only a day out, right? So I think it's probably safe to say that that is the most likely expectation. Now, coming into this year, I thought there was a decent chance they might cut by June, but, seeing where inflation is right now, seeing where, where everything else is, I think it's safe to say that the most likely expectation, right, is that they just hold rates steady. Remember, last cycle, if you think back to last cycle, the Fed cut 1 month after alt Bitcoin pairs had a weekly close below the range low, right? We remember that. 1 month after the first weekly close below the range low. Because this range low close occurred in June of 2019. And then, as we know, the Fed cut the following month. Now, again, I'm not suggesting the Fed cares about your altcoins. We know they don't. But I do think it gives you a glimpse into the health of the average consumer. Okay? So at this point, we cannot possibly have a weekly close on alt Bitcoin pairs below the range low, even though it is at 0.39, right? That is breaking support, but it's still not a weekly close. Okay? And so you can't have a weekly close below support before the end of the week. And so, again, it would sort of stand to reason that something similar could happen again. Now, remember, in June of 2019, when alt Bitcoin pairs broke down, the Fed in June of 2019, they came out and said they're not going to cut rates until 2020. I showed that article before. They came out and said they're not going to cut rates until 2020. It was when they said that alt Bitcoin pairs immediately broke down. You see? It was right when the Fed said that they're not going to cut rates until 2020. And then the following month, the Fed cut rates. So, that's why it's so interesting, is because the Fed cut rates literally the following month after they said they're not going to cut rates until the following year. So it shows you how quickly the Fed can reverse course. Now, the Bank of Canada and the ECB have already cut rates. And my guess is that the Fed is going to try to hold out longer than all the other central banks that have not yet cut rates, like the Bank of England and a few other ones. But that's my guess. And it makes sense because the U.S. economy is theoretically stronger than a lot of these other economies. Therefore, interest rates theoretically should be able to stay higher for longer than these other economies. And so that's, I think that's where we are. And so I really am curious, what is the Fed going to say? We also know that last cycle, and this is the sort of the most puzzling thing. Last cycle, we know that alt Bitcoin pairs bottomed when the Fed pivoted, not from higher rates to lower rates, but when the Fed started to expand the size of their balance sheet, right? If you look at the balance sheet, you line it up with alt Bitcoin pairs bottomed precisely when the Fed went from reducing the size of the balance sheet to increasing the size of the balance sheet. Now, the Fed continues to decrease the size of their balance sheet, and so too, all Bitcoin pairs continue to bleed. However, while QT is likely going to continue, unless the Fed throws us a curveball tomorrow, while it's likely to continue, they have said that they anticipate reducing the rate of quantitative tightening. And so, you might see it shift from, sort of this slope to something like this. And I don't know, right? I don't know how that's going to affect things exactly. I mean, the idea is that it takes longer for things to play out, and by reducing the pace of it, they could theoretically continue QT longer than they otherwise would have, just simply by not continuing at the same pace, but going until they were going to stop anyways, just making it last longer. And so, that's something that could change tomorrow. So you have a lot of things, right? I mean, you have interest rates, which are likely staying the same. You have quantitative tightening, which is likely going to continue, albeit at a slower pace. And then you have inflation, which we don't know if it's going to come in hot or cold. And then, of course, you have the wild card of what is Powell going to say? Are they going to come out with a dovish undertone or a hawkish undertone? And I mean, I have to say, if you just simply go look at inflation year over year, it would make sense for them to express some concern, right? Because this hasn't gone down. Now, there are some indicators suggesting it eventually will, as long as they hold rates high enough for long enough. But again, if they act too prematurely, then you run the risk of repeating the 1970s, right? Where it went down to about 3%, right around the same spot that it is today. And then you get a second round of inflation. And it's interesting because, we always look at this, we're like, well, surely that can't happen again. And honestly, my base case is not to have 3 rounds of inflation like the 1970s. I think you could also make the case that it's similar to, say, other times, like maybe the 1940s. But even in that case, I think you had a couple of peaks as well. But it ended in a deflationary crash. 1970s did not really end in a deflationary crash, as you can see, right? I mean, we kept getting these rounds of inflation, then eventually it came back down and settled at lower levels that they were hoping for, right, around 2% or so. It may be a little bit higher, and then ultimately down here below 2%, down to 1%. But it took a long time to get there. And so, the Fed does not want to go through the 1970s again, but there's also this level of I think people getting tired, really wanting rates to be cut, politicians putting a lot of pressure on the Fed to cut rates. And so who knows, how can they hold off long enough? One thing to remember is that central banks do not control the long end of the yield curve. And I've said this many, many times before. I think there's this thought process that says that if the Fed cuts rates, then mortgage rates will they'll have to go down, right? But one thing to remember is that the Fed controls the short end of the yield curve, not the long end. And there's no better recognition of that than just simply looking at what just happened with the ECB. Because if you were to go look at the euro area interest rates, you'll see, in fact, that they've cut rates, right? You'll see that. They've cut rates. But what you'll also see, if you overlay the 10-year yield in the euro area, you will see that, and let me just switch this over to, let me just go to its own page. If you look at the 10-year yield, while the ECB cut rates last week, the 10-year yield isn't necessarily falling off a cliff, right? I mean, it's still hanging out up here. And so you have to remember, I mean, it's going to be based on why are they cutting rates, right? So if the Fed cuts prematurely before inflation is tamed, then you run the risk of the 10-year still going up, right? You run the risk of the 10-year still going up. And by the way, right now, it's still above the bull market support band. And the reason why the 10-year could still go up, even if the Fed cuts rates, is if they cut rates too soon and then inflation expectations ramp back up, and then the yield curve is like, well, no, if the bond market's like, well, Fed, if you're not going to do the job, we'll do the job for you. Okay, something like that could theoretically happen if the Fed cuts too soon. Because then, rather than pricing in a slowdown in the economy, the market starts to price in the economy really starting to reaccelerate, igniting inflation once again, therefore leading to the long end of the yield curve going up. If, on the other hand, the Fed is panic cutting, then the long end of the yield curve could go down if it actually is because of a slowdown in the economy. And we just simply don't have the answer yet to sort of whatever landing we're going to have because the Fed hasn't cut rates yet. And so, there's a lot of sort of discourse around, have we achieved a soft landing? Has it been a no landing? Will it be a hard landing? You can't really talk about it being a landing at all until you start to see rate cuts, right? Because again, that's where the issue is do they wait too long to cut rates or do they not? And if they wait too long and they have to panic cut, obviously that wouldn't be good. And if they don't wait long enough and they cut too soon, then the yield curve could still go back up. The long end of the yield curve could go back up. Now imagine what that would do to sentiment if the Fed cuts rates and yields go higher, the long end goes higher, which might not be on many people's bingo cards, but it is a potential outcome. So that's kind of where we stand right now going into tomorrow. And so there's going to be a lot of volatility is my guess. So maybe that's where the narrator says, and then there wasn't, but I'm guessing there's going to be some volatility tomorrow, and you can see that whether you're a bull or a bear, you can find a reason to support your view, right? Because the last two FOMCs marked local lows, and it was actually on the day of FOMC where the local low was set on that day. So it would be on June 12th, right? But then on the other hand, CPI releases, 2 of the last 3 were pretty close to marking local tops, right? Pretty close. The one in April, the top had just occurred a couple days before. And then the one in March, the top occurred, a couple days later. And then the one over here in May, you can see that the local top anyways, occurred just a few days later before coming back down. So there's definitely a lot of conflicting information. And that's why this last line over here is a different color. It's because it's showing you green on top of red, right? Because we're getting both FOMC and CPI in the same day. And so that's where we are. That's where the market stands. You certainly do have, I was looking at sort of the same chart, but with alt Bitcoin pairs, so there's a lot of mixed results. But that might be interesting to see what the reaction of alt Bitcoin pairs is tomorrow. This chart right here. And here, if you're overlaying, if you're just looking at say FOMC, there's not really a really compelling case to look at, right? So, if you were to simply look at, say, these red lines, FOMC, you will see, in fact, that, the last time alt Bitcoin pairs rallied about 5% when we had FOMC. In March, they were basically flat, right? There wasn't a whole lot of movement. And then they went up a little bit for about a week or 2, and then they fell off a cliff. The time before that, they were just sort of in the middle of a downtrend. Got a little bit of a move up after, but the downtrend just continued, right, the following week. And so there's not really a clear picture for alt Bitcoin pairs. You guys know my general view on alt Bitcoin pairs, but and it is notable that we are at 0.39 right now, but again, it's still not a weekly close, and we know with all this macro data coming in on June 12th, market can move pretty quickly. So we'll see what the reaction is. Hopefully this video has been useful to you guys. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.